Good morning, everyone. This is Matthew GS UK. We are 1st of February 2025. It's currently 11:50 a.m. in the UK. This is episode 28 of the 51362 EMA strategy. And in today's video, I'm going to be sharing, if you're brand new as a beginner, how you can trade gold. I'm going to give you the step-by-step complete guide on how to trade gold, how I trade gold, and we're also going to be looking at other markets such as Bitcoin and US30. But really good trade on gold this week. It was around 5,000 pips that was banked. Absolute beauty of a trade. This was posted in the free Trademasters Telegram group, link in description to get access to that. I am affiliated with FP Markets, the broker. We get to use any lot size in any market, so feel free to use my affiliate link also in the description. I'm also affiliated with TradingView. We get 20 free alerts with the basic package, which has been an absolute game changer. And at the end of the video, I'm also going to be looking at the economic calendar for the high impact news for next week. If you're new to the channel, welcome. Please subscribe. It does help the channel grow. And without no further ado, let's jump straight into this. So if you haven't done so already, I do recommend watching episode 1 because I show you how to set up the indicators and all the alerts, but you really need to download this indicator called 51362 Clouds. It's completely free to download. It's completely automated, which is great. We don't have to draw any trend lines or this and that. It just does all of the work for us, and pretty much we just set alerts on this indicator, and when certain criteria is met, we get in for the trade. So currently looking at XAUUSD, which is gold on the 4-hour time frame, and we are bullish on gold. I believe because Donald Trump is back in power, we've got some bullish momentum going. There was a pullback at the start of the week. I thought we was going to reach the 62 EMA, but we didn't quite get there, but that's not a problem. And what happened on the Tuesday is we had the 5 and the 13 EMA alerts go off. So the yellow is the 5 EMA, the green is the 13 EMA, and 5, 13, 62, they are all Fibonacci numbers. So when the 5 and the 13 EMA crossed over, I got an alert on my phone to say this has happened, which is great. We've also had a break of structure. So we've broke this candle here. We've broke this candle here because we've closed above it. So I'm thinking, okay, this is looking like it might go higher. Then so it's formed a higher high now. Then it's forming a higher low. We're getting this pullback. I've had the 13 EMA alert go off, and we've got targets above. I would say this is a target as a good place to set a take profit if you wanted to. But what happened was, as soon as the EMA alert went off, I went in for a buy. Now, this is a medium risk kind of trade when this happens, because you have to market execute. That means you have to get in the market straight away when the 13 EMA alert goes off, unless there is a last down candle before that move. For instance, this one down here. I've seen many times the market pull into the 13 EMA and then reverse. No one knows what's going to happen. That could happen, or it could carry on going lower. Now, I had my stop loss here. So price has started to reject, and I thought, yeah, this is gonna potentially take off. However, it had other ideas. It did stop me out. I did put this trade in the Telegram group, and when all the criteria is met, you have to get in the trade. You should not hesitate. And we had multiple confirmations to get in for this trade. Another criteria is when you're above the 62 EMA, you really should be looking for buys. It's a bit more riskier to look for the sells. So anyways, we got in for a buy. Market stopped us out. And I thought, okay, well, I'm going to keep an eye on this. And when I had a closer look, I noticed that imbalance was filled here. Can you see how this candle here has wicked down, filled in this imbalance, and then started to reverse? So I've gone in for a buy again. But before I do that, let me just show you. Okay, so this is the initial trade. What's going on? There we go. So this is the buy that I took when the 13 EMA alert went off. Can you see how it wicked down here and then it started to reverse like this? So price is currently here at 2757. So I've gone in for a buy. Then I got stopped out. And after being stopped out, I obviously noticed that the imbalance is being filled. So can you see how we've wicked down, filled in this imbalance, and then we've started to reverse. So I've woken up and this was currently where price was. And I think that was around 2,000, 3,000 pips. And then as the day went on, this is what it looked like. And that's around 4,500 pips, I believe. So gold was a really, really good trade that was caught. So going back now to gold here, the initial target was smashed there, and then price has just carried on going higher and higher, and it's ended up being around 5,000 pips. So really happy with the gold. And price actually did come back down to the last down candle before this move here. Can you see how, yes, we initially did fill the imbalance in, but then price has gone further down and it's filled in it's filled in their positions, it's mitigated out of their positions. So this is the last down candle before this up move. So we could have set a buy limit down here on this trade. Now what I will say is price can hit the 13 EMA and then take off, so we really need to be getting in on the 13 EMA. However, price could carry on going down like in this example, fill imbalance and then reverse, but then it could also go down further and mitigate out their position and then reverse. So I'm the one that doesn't like to miss a trade, and I'm sure you are the same. So getting in on the 13 EMA and having a stop loss all the way down there would be massive. And on this occasion, I did take the L there, and then I observed, like I mentioned, and I got in once I see what it was actually doing. But getting in on this very last down candle here before this up move there and holding it all the way up to here is nearly a 1 to 10 trade. Now that is insane. I don't really know many people that are kind of catching these kind of trades, especially on the higher time frames, but this happens week in, week out. It's all documented throughout the series. The trades that I take are posted in the free Telegram group. And yeah, very, very happy with gold. I like to trade quality trades over quantity. So I've switched my mindset from going to day trading to the higher time frame. So we have to be more patient. Patience is something that can be learned. We just have to have that discipline to be patient for our setups, and then we use the alerts so we're not staring at the trades or the markets all the time. And when our criteria is met, we jump in the trades. And these are the kind of trades, the quality trades that we can get in when we are patient. And I mean, who doesn't want to catch these trades? Like, one of these trades is enough for the whole week. You don't need to be trading loads of different markets. And we can look at other markets if we're not getting these setups, and then you just manage this trade throughout the week. So this was entered on Wednesday. I've held on Thursday, and then I've exited on the Friday. So it's like a 3-day hold of a trade. So yeah, gold has been very, very good, and very, very happy with that. Moving now on to Bitcoin. So with Bitcoin, we did start the Monday off below the 62 EMA. So we've had a break of the 62 EMA. We've come up to the 62 EMA as a pullback. We did get the alert to the 13 EMA and the 62 EMA. So I did go in for a sell. Unfortunately, I did get stopped out on this trade, but that's absolutely fine. I then started to observe what the market is going to do next. And we did get a pullback to this institutional candle here. So we've had a small break of structure, and then we've had the pullback down here. So we could get into a buy down here. However, this is a bit more riskier because we are below the 62 EMA. So any kind of looking for sells. But then I was just observing of what Bitcoin is going to do next. And we started to go higher. So when I see that it started to go higher, we then got 3 touches to the 62 EMA, that magic number 3. And with that, I've gone in for a buy. This trade was posted again in the Trademasters Telegram group. So gone in for a buy, and one target that would have been good would be this up here. However, I did notice that we were heading towards another institutional candle, which is this one here. So this is the last up candle before this down move. So market naturally has to move up to this area and mitigate out their positions. They could carry on going higher, but then this is a reversal zone and they could go lower. Now, how do I know that this is an institutional candle? Well, this candle here actually captured liquidity, and we had equal highs that were actually taken out, and the equal highs that are taken out are here. So these equal highs were taken out here. Can you see how this wicked up? It's taken these guys out, and then we've reversed here. So this would have been a good to take profit area here, and a potential to take a short if you wanted to from this last up candle before this down move and catching this sell down here. I didn't catch the sell, and I actually got out the trade around here. So it was a 1 to 4 for me. I don't really like to trade Fridays as much, so I was just observant. But there was a small buy opportunity as well on the 13 EMA. Can you see how prices tapped multiple times into the 13 EMA here? So could have got in for a buy there, could have caught a little bit of profit here. But I didn't take this trade. As I mentioned, I don't like to trade Fridays. and then this is just reversed, and that's absolutely fine. So happy with taking this buy here on the 62 EMA. This was a great trade to catch. So 2 trades that I've taken this week have only been on gold and Bitcoin. I was happy with those trades, and there was an opportunity on US 30 which I never took, but just want to show you US 30 now. We so we are bullish, we're above the 62 EMA, and a point of interest would be this last down candle before this up move here. So this is a potential reversal zone, potential key point to get into the market. And on Wednesday, this wicked down, we got the 13 EMA alert go off, so could have gone in for a buy there. You could have also had a buy limit set on this is institutional candle here. Okay, and then the target, we did reverse from this area here, but that trade there is a 1 to 3 trade. We wicked down a bit more, we got another touch into this area, and then we did start to go higher. Now, one thing we can always do is look left. Like, why did the market decide to reverse from this area? So if we look left, we scroll left, there's potential of imbalance that needs to be filled, and there's a potential of an institutional candle, which is that last up candle before the down move. So if we look for imbalance, I've noticed that there is imbalance here that needs to be filled, and also we have this last up candle before this massive down move. Can you see what this is? The last up candle before this massive move down here. So if we go down here, there's a button here we can get taken right back to where we are. So if we zoom in, let's get rid of this. Right, so the grey box is in balance. You see how this has wicked up, it's filled in balance, and then it's reversed. But then we did go higher, and we've wicked into this reversal zone up here. They've mitigated their positions there, and then they reversed the market. They reversed US 30, and that's what it looks like. So could have taken a sell position up here. I mean, it's always a bit more riskier because we are above the 62 EMA. However, from that, we have had the 5 and the 13 EMA crossover. So there's a potential that we could catch a sell next week, and we could potentially, this is just a maybe, and it's a bias, we could have price come into the 13 EMA, which we would then be looking for shorts potentially to take the market lower. And we only get into these positions when the criteria is met and the alerts go off. So this is a potential for US 30 next week, so we wait and see. We could also get into the 62 EMA and look for a buy to go higher. Again, we just react when the market shows us the opportunities to get into. So US 30, there was a good trade, a couple good trades, and once again there might be another beautiful trade next week for US 30. Moving now on to GBPUSD. I personally did not trade GBPUSD this week, and good thing I did not, because this has just been consolidating, so it's just pretty much going sideways and nothing really has happened. However, as the market has closed on Friday, we are into the 62 62 EMA. So we could go higher from the 62 EMA, or we could break the 62 EMA, retest it, and then go lower. So it'll be interesting to see what happens with GBP USD next week. US dollar CAD I haven't even looked at, and yeah, it's for me, and nothing really has majorly happened. We didn't get 62 EMA touch. There was a few 13 EMA touches here, so there was potential to get in for a buy there. But I was happy with gold and I was happy with Bitcoin. Always quality over quantity, and once I was in a very good trade like gold, I was just managing that trade throughout the week, which is the same as Bitcoin. And this is the thing, it's quality trades for those markets. So I wasn't really interested in trading more markets. I was happy with what I got from gold and Bitcoin, so I stayed in those. And overall, very, very happy with this week. Sometimes if you get stopped out, you have to take a look deeper and observe and say, okay, well, where's market going to now? Can the market reverse from this area instead? For example, imbalance or institutional candles. These are our points of interest. So when it reaches our next point of interest, we get in on those trades there, on those areas, and not be like, oh, I've got stopped out now, I'm going to move on to the next trade. No, we need to look if there's another potential setup or entry that we can get back into the market and then get back on track. Because with that gold trade, yes, I got stopped out and I could have been like, oh, okay, well, gold is just going to go lower, and I'm done now. Gold was a no. But then I realized, like I mentioned, there was imbalance, and then there was the institutional candle, and then when I see it was reversing from them, we get back in again, right? We're always going to lose trades. There's no trader in the world that does not lose trades. Everyone loses trades, but it's getting back into the trades that gets you back on track. And then look what happened with gold. It turned out to be a really, really good winner. So some key takeaways for you is always have your points of interest marked up. Always get back in trades if the second criteria is met, and always backtest. I will give some homework, I reckon, for next week. But yeah, overall, I'm very, very happy with the trades this week. Finishing up now with the economic calendar. On Monday, so we're only looking for red folder news. On Monday, there's nothing really. Tuesday, nothing again. Wednesday, some Euro high impact news. There's something on, yeah, what's it? Yeah, US red folder news. There's a couple things. Thursday, there's some red folder news on Thursday for the US, so have to keep an eye on that. But the big one, as it's the first Friday of a brand new month, being in February, we have NFP, which is non-farm payroll. Where is that? This is it here. So it's at 1:30 UK time. This really moves the market. It's one of the only things I'd say that majorly big time moves the market, and it's this Friday. So keep an eye on that. Very excited for next week. And the strategy is starting to take momentum, which is great. It's great to see all the new subscribers that are jumping on. I appreciate everyone that is watched this stream. Please do subscribe to the channel. It really does help the channel to grow. And let's have a killer week. I will see you in the next one. Bye.